Did you have a laugh seeing all the lemon-themed memes on social media? Lemon prices have risen sharply, just like the rates of petrol, diesel and LPG. A fortnight ago, lemons were retailing at about 50 to 100 rupees per kg. Blame rising fuel prices for this situation and the sudden explosion in lemon jokes. But it's no laughing matter. According to a local circles survey, about 9 out of every 10 Indian households have felt the pinch of rising vegetable prices in the past 30 days. 37% of respondents said that they were experiencing an increased spending of over 25% on vegetables. According to another survey, around 24% of Indian households have been forced to reduce their consumption of edible oils due to a sharp spike in retail rates. Around 29% have downgraded their cooking oil to affordable alternatives. Amid all of this, the India Meteorological Department has predicted that cumulative southwest monsoon over the country as a whole is expected to be normal in 2022. SkyMet too indicated that southwest monsoon in 2022 was expected to be normal. This should come as a relief to millions of Indians. A good southwest monsoon is supposed to boost agriculture production, thereby easing inflationary concerns. However, the devil lies in the details. IMD's forecast showed that the monsoon could be largely above normal in most parts of India, barring pockets of northeast India, Jammu and Kashmir, Rajasthan, Haryana, Punjab, Tamil Nadu, Kerala, and Ladakh. Meanwhile, SkyMet said that the first half of the southwest monsoon is expected to fare better than the latter half of the season. Speaking to Business Standard, ICRIER's Ashok Gulati said that a normal monsoon might bring some cooling effect on vegetables grown within the country. However, imported inflation, such as in the case of edible oils, would not be impacted. Uncertainty surrounding the Russia-Ukraine conflict would continue to cause inflationary pressure. Despite a normal monsoon, inflation was expected to stay in the 6% plus band, if not higher.
Geographic spread and the monthly spread, both of which I think SkyMet and IMD have highlighted within the text, and which states very clearly that not every state would be getting as robust rains as we predicted to be. Between the 4 months, there is a clear indication that the latter part of the monsoon period, and that is June to September, so we're looking at August and September months, wherein at least 49% of the monsoon rain comes. Those are the 2 months where, because of negative IOD, we are predicting, at least that's what the scientists are predicting, the rainfall may not be as robust. This happened last year. This is also happening this year. And therefore, I think what we understand is, so while the aggregate number is good, there is a lot of information camouflaged within. Third thing is, and that is critical, is the dry spells. Both of them have acknowledged that there would be dry spells. IPCC report continues to raise these alarms that we will have changes in the pattern of precipitation, and these longer dry spells has a huge negative impact on the crop. Plus, what is really critical is the temperature rising. March has been unprecedentedly hot, because of which yields are getting impacted, particularly in case of wheat, where we see shriveled grains already. Onion is getting affected by a lot of pests, and therefore yield losses are already coming in. So with lower monsoons and rising temperatures, yield may be at loss. So therefore, the picture doesn't look as quite nice as we'd expect it to be. The inflation in the coming year is likely to stay high, and for global reason, because of crude, because of monsoon rains now, I think we need to be ready for higher rates of inflation in this year.
If the anecdotal reports and surveys aren't enough, here are the official numbers. The headline inflation rate has remained above the 6% mark for 3 consecutive months. Analysts were surprised by the Consumer Price Index-based inflation rate for March. At 6.95%, the rate stood at a 17-month high, and it is likely to remain elevated in the coming months given its broad-based nature. Food items primarily drove the rise in retail inflation in March. The Consumer Food Price Index rose to 7.68% from 5.85% the month before. The fact that core inflation rose to 6.4% in March should also raise red flags. Given the limited projected relief from the monsoon and March inflation data, should the Monetary Policy Committee consider increasing rates at a faster pace than what was expected a few weeks ago?
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.